Hello everybody, welcome to the technical analysis webinar here with AvaTrade. My name is Troy, I'll be leading the session. Before we get going, let's do a quick systems check. If you would, just type OK in the chat box if you're hearing me clearly and seeing my screen okay. All right, great, I've got enough responses, thank you. It looks like we're up and running fine. If anyone has any issues as we go along, please let me know. Lewis, I don't know that we have that stock available, certainly not on the MT4 that we'll be looking at today. We do have a huge stock selection on the MT5. I'm not sure if that exact instrument is available, though. I don't recognize that particular stock. Okay, so as we get going, keep in mind, as always, no one trade is guaranteed to profit. I think we all understand that. You've got to manage risk in one way or another, whether using stop loss settings or hedge positions may be prepared to pick up in the opposite direction to cover yourself, or some other method of managing your risk. It makes sense to have some kind of risk management plan. One useful tool that you'll find on our web trader platform and the AvaTrade Go app is the AvaProtect feature, which is a risk management tool that allows you to protect against any losses during a defined time period for a small premium cost. And so that's available through that app and that platform exclusively through AvaTrade. So you might check that out, and we'll take a look at it as we get going as well. Keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. What is technical analysis? Real quick, whether you're an advanced trader or a beginning trader, you should understand the basics, right? And so, and we're going to get into the strategies here in just a moment, but technical analysis, what is it? Looking back at the charts, right? Looking at the historical patterns, whether there are price levels that look important, support, resistance levels, maybe you see ranging activity or trending movements. These are all things that we'll look at and talk about as we look at the live charts and look for examples of potential entry points and exit points. Typically, we're doing manual methods of technical analysis, drawing our own lines, looking for our own movements. You can use indicators as well. Indicators are helpful for, I think, best for confirming what you think you already see. But in some instances, indicators can help show you things maybe that you won't notice on your own, especially as a beginner. But one thing to keep in mind about indicators is they don't know what's going on with the fundamental news situation. Indicators are looking back at the same movements on the charts that you are looking at. And so because you can take into consideration whether there might be stimulus in the US soon, whether the COVID vaccines are working well, whatever the most recent headlines are, you can decide to trust a movement in one direction more than another, trust a signal in one direction more than another, and an indicator really can't do that. An indicator is just strictly going off the technical analysis, and that's it. And so that's why I say indicators are helpful for confirmation, but in the end, your brain probably is a little bit better for deciding which exact entry points and exit points you trust the most. As we go along, please feel free to ask questions, give input. I'm happy to share information and answer questions at any time. So let's take a look then quickly at the AvaTrade website. So as you're on the website, you can look real quick and find the AvaTrade Go app under platforms, trading platforms, and you'll see what I mentioned briefly already. AvaProtect is a feature available on gold, silver, and all FX pairings that is an option for managing risk. We'll take a closer look at it in a moment, as well as some advanced functionality with the take profit and stop loss, where it converts or calculates, I should say, your potential profit, your risk to the price that you enter for the stop loss. So it acts as a trade calculator as you're setting up your order before you buy or sell. And it also tells you your margin requirements as you select your trade size. So very useful for not just beginners, but also for more advanced traders, because it saves time. And in trading, timing is everything. And so if you can save time with your risk management setup, your price level setup, with stop loss, take profit calculations, that can be very useful when time is a factor, if it's calculated for you in the order window. The MT4 platform does not do that. The MT5 platform does not do that. So it's a useful tool, even if you do use the MT4 or MT5, which there are reasons why you certainly can. It's an advanced platform, the MT4 and MT5, for many things, just not for that functionality. It doesn't calculate things for you in the order window. Someone's complaining that they can't hear, so I'm just going to quickly let him know it's just him. Okay. So let's then, if you log in from our main website, you'll be in our web trader platform, which looks like this. Okay, and you can slide the chart down to see your favorites list, most rising, most falling, or by instrument class, commodities, bonds, crypto, etc. Okay. Now, what I wanted to show you real quick on this platform before we get into some strategy concepts on the MT4 is that risk management stuff that I think is very important. So if you're using an instrument that offers the AvaProtect feature, let's pick something that does, maybe USD Jpy. Okay, so we bring up US dollar yen, and if we buy or sell on that, maybe sell, maybe makes a little more sense. We'll look at the technicals on that and talk about the fundamentals in a moment as to why selling might make sense on the USD Jpy. But let's use this as an example. So let's say I want to do a trade size of maybe one lot. And so I start increasing my trade size, and maybe I'll do half a lot, right? So here's half a lot, 50,000 value position size. It tells me straight away how much margin do I need, 125, and it's in my account currency, USD. If I want to do a stop loss, if I'm talking about a sell here from 105.28, maybe I say, okay, I'll give myself 50 pips. So 105.78, maybe I put my stop loss. Okay, I quickly can see possible loss converted to my account currency. So I can see, oh, good question, Luke. Yeah, this platform is built to become the same as a mobile app would be. So when you log in using your mobile device, using your phone into the web trader, it works perfectly just like a mobile app. So you really don't have to necessarily use AvaTrade Go. It's a nice app, but it has the same functionality as this platform. And you can just log into the platform using your mobile from our website, and it works just great. Good question. Okay, so I can see real quick, okay, 50 pip stop loss, and maybe I put my stop loss 50 pips away because it's beyond a resistance point that I think that's where I want my stop loss. And so maybe I don't want to change my stop loss to change the risk, but I'm looking here and I say with my stop loss price here, I'm risking $239 almost if it hits that stop loss price. And I look at my balance and I say, wow, that's well over 10% of my balance, right? So maybe then I say, okay, I need to downsize my trade. And you see, as I change my trade size, then you look and you say, here's my new risk, $94. So immediately it calculates your exposure based on trade size and distance to stop loss. And so maybe I say, okay, that's more like it. It's under, under 10%, 8%, 7% risk, whatever it is. I know the exact dollar value of my risk. Maybe I'm okay with that, right? Take profit, same thing. Maybe I know I want to go, I don't know, 100 pips. Whatever price I put here for my take profit, it calculates my possible profit. So if I'm going to 104 and change, then I'm seeing $208 potential profit or so, $203, and I'm risking 93. Maybe I like that setup, and now I'm ready to sell the position. Okay, so very simple to maneuver with your protection. Maybe I decide, you know what, instead of putting a stop loss, maybe I'll use AvaProtect, and I'll protect it for the next 1 day, $34 risk, or I'm sorry, $34 for the premium cost. That's about what I was saying I would want to risk on my stop loss, or maybe less. But now it can go the wrong way as far as it wants, and I'm not losing anything during this coverage period. I'm only out the premium costs, and any profits are mine. So it's another way to manage risk if you feel that there's volatility in the market, especially. Okay, and that works on gold, silver, and all FX pairings. So since we're talking about technical analysis, I think it's nice to know that on this platform, if you go to Trading Central, this is a premium service that's supplied for free. You've got signals like here in the analyst view. You've got the technical analysis done for you. It's time-stamped, so you know when these came in, and it breaks down the price levels, support, resistance levels. You see the lines drawn. It shows you the expected breakout move. Gives you the ideology behind it here. Very nice signals. So it's something that you could utilize in your trading strategies potentially with the technical analysis done for you here. Okay. So again, good for beginners, good for even experienced traders. You don't have to do every signal, right? You can get ideas here and then check it out yourself, right? And maybe you're really experienced at technical analysis and you know which ones you like the best when you look at these, or maybe you are new to things and you just use it as a helpful guide as to trades you might be interested in. Okay, but that's there for you on this platform. Now, as we go along, before we get into our technical analysis, let's first look at, well, what are the headlines today? And we can see dollar in demand on US economic progress. There was a slew of good economic data that came in yesterday, and there are more announcements coming today that could potentially be good. There's also been a lot of better than expected earnings numbers. It's earnings season. The big companies report their earnings figures quarterly. And so, you know, Amazon, Apple, all kinds of companies have reported, and more will be reporting. And the numbers have actually been very good, especially for the online-based companies. So the US dollar is strengthening because the US economy is looking sound. Now, the US dollar has weakened for a long time because of all the stimulus that's been out there. Through COVID, I think the US has given out 4 trillion. That's with a T, trillion. You couldn't fit that many $100 bills probably in your entire house. 4 trillion given out in stimulus in the past, 6 months, 8 months. And now they're talking about 2 trillion more. So the US dollar is strengthening on this good economic data. But what do you think might happen to the US dollar's move up if they agree over the next few days on 2 trillion more in stimulus? What does that do to a strength of a currency if stimulus passes? Yeah, exactly. More stimulus means potential for the currency to weaken. It devalues the currency. Exactly, which is a driver of gold as well. You start devaluing the USD with more money being printed. This drop that we've seen in gold today and yesterday and today, gold could go flying back up if 2 trillion in stimulus is passed because of inflation fears then again. So just as the economy is really picking up, part of the reason why the economy is picking up is because of the stimulus. Also, I think legitimately some of these businesses are just doing well. But a huge stimulus package could be enough to, at least temporarily, weaken the USD again and drive gold up again. Okay, even with the stock market hitting new highs. Okay, and we saw it through this COVID crisis over the last 6 months. The NASDAQ, the Dow, S&P 500 were hitting all-time highs again and again and again. And at the same time, gold was hitting all-time highs, which some people might think, well, that's backwards. When the markets are doing good, shouldn't gold drop? And the fact is, if the markets are doing good because of inflationary tactics like trillions in stimulus being handed out, the markets love that, but the strength of the USD doesn't love that. And inflation then drives people to gold many times. So It was maybe a unique thing for a lot of traders to see gold and the NASDAQ hitting all-time highs on the same day even through this pandemic. So we're in the situation where the dollar is strengthened because of good economic numbers. And I think understanding that there could be huge stimulus coming in the US soon, I say could be, probably I should say will be. There's a huge potential for a pullback on the USD and a bounce on safe havens like gold. All right, next, here's the slew of data I referred to yesterday, not just in the US, European Union. Look at all these green numbers. This is from yesterday, better than expected numbers out of the European Union, out of Great Britain. Report after report, better than expected, better than expected, better than expected. You see down here in the US, non-farm employment, better than expected, services PMI, better than expected, manufacturing, better than expected, etc. Okay, like a broken record. So this really created optimism coming into today. And now we look and we say, look, more announcements out of the European Union, retail sales better than expected. Again, and we've got more announcements coming over the next hours out of Great Britain, out of the US. These 3-star announcements are big ones. It means they'll move the market potentially more. Bank of England interest rate decision, likely they're going to keep the interest rate very low, which the markets will love. Gold won't like that, right? Low interest rates, cheap money, inflation fears, right? So as stimulus or is passed out or interest rates are kept artificially low, these are drivers of gold maybe to go back up. So as these announcements come in, if they're green again like yesterday, you could see the indices, the DAX, the Dow Jones, the Nikkei, NASDAQ, etc., the FTSE, they could all be roaring up further, even while gold might come roaring up further potentially. So lots of potential for movement. Even Australia late today will be having retail sales come in, high level announcements. So big deal on fundamental news still to come today. World faces around 4,000 new COVID-19 variants. That's important to understand. It's not all roses right now. 4,000 variants of the COVID strain. Some of them they're afraid maybe these vaccines won't do a good job with. So now they're talking about mixing vaccines. You get the first shot with one, the second shot with the other, just to try and diversify your protection against the variants. So this is interesting type news to keep an eye on, because that could cause a huge swing in the market if it's determined some of these variants are not affected or stopped by the vaccine. So far, thankfully, the research shows that they are stopped by the vaccines in high percentages. But always be ready for huge swings. Have your risk management in place, because you don't know when this type of news could change and the markets turn on a dime. So, trade with what you know, prepare for what you don't, because these types of headlines could change in a hurry. Okay, so let's get on the charts. Let's take a look at what's happening. I've got silver up here right now. We could also be looking at gold. It would look similar. We see a lot of dropping in silver, hitting a support level here. I'm on 1 hour candles, and we see, oh, this is an old chart. I'm looking at, oh no, it's not. We're good. February 4th. So we changed some names on some instruments, but not on gold and silver. So the US indices, a couple others, like the NASDAQ is now called the US Tech 100. So just make sure, look at the dates when you put your indices up, make sure they're current. So we see what silver's doing on a support level that you potentially could think about. If stimulus passes, what happens with silver? Likely it could go up as the US dollar potentially then would weaken. So you could be looking at buy positions on silver. The technical analysis tells us that that could make sense. Stop loss below the support level, take profits somewhere up, depending whether you're scalping. You could take profit at the first price level. You could take profit if you're a more patient trader at the next resistance level. Okay, we see resistance. This would be a spot if you were buying that you might take profit. If you're more patient, you're waiting more long term, you might take profit at the next resistance level, which is right here. And if you think it's going to get back up towards the all-time highs, or not all-time highs for silver like gold, but to the recent highs, then the upper resistance is up here. So you've got your choice in terms of price levels that you might want to take profit, and maybe you do partial closes. You know, I could have a one lot position. When the price gets near here, I could close a quarter of a lot. And if the price gets to the next resistance level, I could close another quarter of a lot and keep the rest of it running until it eventually reaches the highest price level that maybe I believe it could reach. Okay, so there's huge potential here for safe havens to rise back up. I'm not saying for sure they will. Obviously, nobody knows for sure. Otherwise, we'd sell everything we own and put everything on one move. But the potential is there fundamentally for the US dollar to re-weaken as the US lawmakers are close to a deal, I think, with this potentially $2 trillion stimulus package. So it looks like there could be some reason for silver to climb. So if we were going to buy on silver, and I'm not saying you have to, but I'm going to simulate a buy trade here, then you take a trade size that makes sense for your balance, for your risk management tolerance, and you put your stop loss below a price level that you think it won't break, right? So if I think that it won't break this price level, fine, I put my stop loss here. And it's a small risk. Maybe it breaks, and then I say, okay, if it comes to the next support level down here, then I'll re-enter again. Okay? You could even put a pending order here in case it does drop and hit your stop loss on the first one. Maybe you re-enter here. Okay? Limited risk. Now, if you're a more patient trader, and there are a couple different ways to go about this type of move. If you're going to take your profit at the first resistance level, then maybe you only have your stop loss here. If you're planning to sit this out and wait for silver maybe to go to a higher resistance level up here or up here, then maybe you don't mind then having your stop loss below 2 support levels, which then would be here. Now, even if it tests the 1 support level, I'm still in as long as it doesn't break the next support level here. Okay, you see this was resistance, 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 and then it became support because it went above that resistance. Okay, that becomes the new support level. So you can widen the strike zone by taking a little smaller trade, put your stop loss instead of below 1 support level, below 2. And your take profit, well, it depends what you're looking to do. Maybe I'm in the middle here. I say, okay, I'm risking about the same amount now as my potential profit. And I've given myself a nice wide strike zone so that even if I'm wrong on the exact entry, I still can withstand some movement before that stimulus maybe passes, and then maybe it goes the right way. Okay? A lot of times by taking the smaller trade, widen your strike zone a bit, get your stop loss below not just 1 support level, but below 2. In this example, you can withstand more bumps as they bicker about the amount of stimulus maybe. And then once they pass it, even if it came down a bit, maybe then it rushes up to your take profit and you didn't get stopped out because you had your stop loss too close. Okay, now if I'm scalping, I probably have my stop loss here. If I'm just trying to take a quick profit, if it goes to the first resistance level, then I don't want to risk so much. And so my stop loss is probably here. If I'm in more long term, I'm putting my stop loss below a couple price levels, maybe with a smaller trade then, because my stop loss is further away. And then my potential profit is also, my take profit mark is also a little further away because I'm being more patient with a longer term move. Okay, and that's kind of the way these price levels set up on silver right now. Now, something else we could look at then is gold, and you'll see that it sets up somewhat similar. Gold dropped more dramatically. Okay, it actually broke that first support level, and now it's sitting down near 1800. So if we could look at 4-hour candles, you see a support level here, and you see I already drew this a while back, and I've got a buy stop or a buy limit pending order. You see here, 1805. We set that in the last webinar. We bought off 1 support level. It actually went up and took some profit, before it dropped now to the next support level. So that actually, we got a little lucky on that maybe, because we bought off of this support level here and it went up to about 1850-ish or 60-ish and was able to take profit. Now it came down and broke the first support level we were relying on. And now it's down to where we put our backup, our 1804, 1805 entry just before this low point here. That acts as a support level there. You can see it on the 4-hour candles. So this buy limit pending order on gold around 1805, 1804, somewhere around there. You see it hit 1806 and bounced. I was a little bit hoping it would have triggered that pending order. I looked at it and said, boy, it missed my mark by $1. It would already be up in profit because it bounced a bit already. So my pending order got missed by about $1. Otherwise, it would have already triggered, but maybe it pushes down still. I think it still could test the 1800 level right down here. This low point on this wick, somewhere closer to 1800. So, if you're not splitting hairs here and you think that gold should eventually go back up, you can do a market buy anytime you want, right? Put your stop loss below 1800 somewhere. And if you're really patient, the next support level under 1800, if we go to 1-day candles, is down here around 1765 or so. These are 1-day candles. So if you're buying now and you want to follow that rule of putting your stop loss below 2 support levels, then let me just do an example. I'm not saying you should do this right now, but let me, as an example, I buy on gold, okay, market move. I put my stop loss below the support level that we saw on the 4-hour candles, which was right about there. And then I put my stop loss below the support level on the 1-day candles, which if I get below 1760 or about 1760, I'm below those 2 support levels now. 2 support levels. Let me get rid of some of these lines, or all of them. I like to draw a lot of lines, I know. Let me get rid of them. And so now we say, okay, we've got 1 support level here that it's above right now. And so we bought hoping that this support level doesn't break. If it breaks, we've got a more major support level here on the 1-day candles right here. So now it would have to break that support level also to hit our stop loss, okay? It would have to clear the bottom of this wick to hit our stop loss. And you say, wow, that's a long distance. Well, then take a smaller trade. Widen your strike zone if that's too much risk. But it's a more secure stop loss because it would have to break 2 support levels to hit it. If you believe that maybe it won't be today or tomorrow, but maybe Monday, Tuesday, Wednesday, that stimulus will pass, devalue the USD, and that will cause gold to go up, you don't want to get stopped out before it happens, right? So give yourself a wider strike zone if need be. And now if it goes up, where do you take profit? Well, we're only risking from here to here. So if I want to take profit, that if I'm being patient with my stop loss, maybe I put a take profit. Wait a minute, what did I move? Oh, I think I just slid my pending order. Let me go back in on 1-hour candles. There, now I can see my line. And now let's go back to 1-day candles. And here's my take profit then. And that's at the first resistance level on the 1-day candles, just before it right here. And that take profit is about double what I'm risking. You see that? It only took 3 or 4 days to drop from this level to where it is now. Okay. If in 3 or 4 days it goes back up here, that's a nice profit. That's like over $100 an ounce up, right? Or no, over $50 an ounce up. Now, let's say, okay, I don't want just 2-to-1 potential profit to risk. Maybe I want more than that. So maybe I say, let's go up to the next resistance level on gold. And now we're getting up near the high around 1950, 1960. So I can take profit up here if I'm really bullish on gold. Okay, now I'm risking, a fifth or a quarter of my potential profit. And all of this is up to you, right? Many times you like to take your profit because the news can change. maybe partial profit. You could take a partial profit if I can get my line to slide. Here we go. You could put a take profit here to close the whole thing, or have your take profit here. And if manually you see the price of gold is getting near this first resistance level, you could close half of your position and let the rest run to your take profit at the next resistance level, if that's what you wanted to do. But we've got some options here with gold. You might be selling on gold right now, thinking USD strengthening, and until it hits 1800, maybe you're selling. That's okay too. That's scalpers might be selling with the downward momentum on gold right now. A more patient trader maybe is banking on a reversal eventually here. You can, and by the way, you can do both things at the same time. Willie, I don't know what you mean. How do you switch to MT4? You either with us have an MT4 account or an MT5 account. And if you're trading on the web trader, you can choose which one you want to trade on through the web trader. It'll trade right on top of either the MT4 or MT5. You can switch between your accounts within the web trader. If you're talking about what I'm looking at here now, this is the MT4 platform. You can't switch between MT4 and MT5 on a single platform. You would, in terms of the MetaTrader platform, you just need to download the MT4 and download the MT5. Okay. All right. So let's take a look at maybe USD Jpy. Anyone have any idea why I think the USD Jpy could be ripe for a drop? Look at the USD Jpy. Look how much it climbed. These are one-day candles. Look at the climb. USD has been strengthening like crazy. Look at this resistance level on the one-day candles. Right about there. Okay. Resistance over here and drop. This wick came up, dropped, came up here, dropped again. Here we are rushing towards this price. Why might this resistance level hold? And it's something that's been a reoccurring theme. We've already talked about it. What might limit the strengthening of the USD here in the next few days? Why might the strengthening of the USD, at least temporarily, swing back to a weakening of the USD? Yes, exactly. Many of you are saying stimulus in the US. Okay, so there's some strengthening of the USD on good economic data. Perhaps a sell limit from the resistance level up here could make sense because of the stimulus coming that you would think would weaken the USD. Okay, so this is something we could look at. Now, you might choose to pair USD against the Canadian, and that might make more sense. If the US dollar, and you see there's a pending order here. See, I have a pending sell limit. Why would the USD drop if stimulus passes? Why would USD Canadian be a good pair to sell on? What commodity out of Canada tends to go up and has been when stimulus passes? Number one commodity, biggest portion of the GDP for Canada. When this commodity goes up, the Canadian strengthens. What commodity am I talking about? It's in the energy sector. Yeah, oil, exactly. Oil. Thank you, Luke. So if stimulus passes, and that tends to buoy oil up because more money for the economy, more demand for oil, typically. So if oil goes up because of stimulus being passed soon in the US, that means Canadian would strengthen, right? Canadian would strengthen typically if oil goes up. And if there's stimulus, not only would the Canadian strengthen as oil goes up, but the US dollar should weaken because of stimulus. If you're handing out $2 trillion in US dollars, US dollar you would think would weaken. So you've got a couple options here with USD Canadian. I've got a pending order here waiting. If I can get an entry at this resistance level, on the one-day candles, boy, that's a nice spot maybe to take a shot at a sell on USD Canadian, especially if it's just prior to the stimulus passing or right as it's passing, right? So the problem is it might not get here before the stimulus passes. If it doesn't quite get there and stimulus passes, you could see USD plunge against the Canadian before it ever triggers your pending order up here. So you could do a combination move. Let's say you wanted to sell one lot of USD Canadian because the fundamentals and the technicals tell you, boy, USD might pull back down against the Canadian if stimulus gets passed. So you say, I'll split it. If I want to do one lot sell, maybe I'll do a pending order of half a lot at the more ideal entry point, and I'll do a market move to sell off of this 15-minute resistance. You see, it is at a resistance on the 15-minute candles. Resistance down, resistance down, resistance. Maybe it goes down now. So I don't miss an opportunity. Maybe I sell 0.50 now, okay, and put my stop loss, go back to the one-day candles, put my stop loss above the one-day candles to get through any indecision, to have a wider strike zone. And I have my take profit at this support level down here. Okay, so I put my take profit here. So my potential profit is about double my risk on my market move. Now, if it catches my pending order, then I'm in with even more. My pending order currently I have at trade size of 0.1. It could be 0.5. It could be whatever I want it to be. So selling in anticipation of a move that hasn't started yet, that's the first step in this scenario. The one-day candle still looks bullish, but the 15-minute candles tell you it's at a resistance point. So maybe you get in with some of your move now in expectation of USD potentially weakening with stimulus. And you also prepare in case on the one-day candles, in case it pushes up a little further before dropping with a pending order at a more ideal entry point. And perhaps it goes up, triggers that one, and then drops, and you win both, right? And the risk involved from this entry is about half of the potential profit. And the risk involved from this entry is about 1/5 of the potential profit. So technically speaking, the price levels look nice from the 15-minute candle to go now, from the one-day candles to wait a bit. And the fundamentals maybe are on your side, depending when they get done with this negotiation on maybe $2 trillion and more in stimulus. Okay, so very nice setup potentially with the USD Canadian that you could think about taking a shot at. Any assets, any instruments that you might request before we end? I have time for maybe one more instrument to take a look at. Oil, okay, let's look at oil. We already talked about the potential for oil to climb with more stimulus. It already did climb in anticipation of it, by the way, yesterday. It was very bullish. So the movement was already cooked in yesterday. And here it is already again today, right? One-day candles, up, 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 up. Look at that. This skyrocket was a combination of a couple things. One is the U.S. is, under the Biden administration, banning more drilling permits on federal lands. They got rid of the Keystone XL pipeline, which brings oil down from Canada into the U.S. So the Biden administration is lowering the U.S.'s ability to produce oil and gasoline. And so that is a stimulus then for oil to go up if supply could be decreased eventually with those policies. And then at the same time, stimulus drives up oil. And they're anticipating that would pass. And so up went oil over the past 4 trading days or so. Now, if we look, what's oil doing now more closely? Look at the 15-minute candles. Here's your pause. There's a nice pause on oil's climb. resistance, 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 resistance. So from a technical standpoint, this is an easy sell. Okay, maybe I sell not half a lot. Maybe I sell something smaller. You know, half a lot's 500 barrels. Maybe I do 100 barrels, right? Or 150. Depends on your balance, your risk tolerance, obviously, your profit goal, etc. So if I'm selling on oil, stop loss just above the high, right there. So there'd have to be momentum to break this high point in order for me to get out on the sell position on oil. Where would my take profit be? Not too far down, because stimulus will drive oil up. If there's some bickering about it, which I expect, you could see oil pull back down. So you could look and say, maybe I go for a profit there, down around 55.5. If it drops 60 cents, 70 cents, that'd be a nice little scalp profit on oil in the immediate movement, because the US dollar has been strengthening today. And so that could pull oil down in the short term anyways to the first support level. So that's a nice little short term move where you're not risking much at all. If it breaks the high points here, then okay, you were wrong, right? And you take your small loss, and your potential profit's about 3 times that to the first support level. Now that small movement could be a big profit depending on what trade size you use, right? Depends how aggressive you are with it, but you don't have to risk much comparatively speaking to your stop loss to get above this resistance. And we all understand why the momentum was there for it to go up. We also understand there's no deal yet for a stimulus package. It's not passed yet. So there's the potential for oil temporarily anyways to push down to the support level here. So it could be a nice little move to go after. All right, everybody, thank you for joining. I wish we had time to look at every instrument suggested. Maybe next time we'll take a look at some cryptocurrencies. Natural gas, I would expect to be similar to the movements with oil, okay? The stimulus package could drive it up. Not passing it could pull it back down, etc. Okay, everybody, thank you for joining. Good luck with your trading. And our next session will be next Tuesday, 6 p.m. GMT time.